Welcome back to the channel, everyone. Today we're going to be talking about your SaaS business's statement of cash flows and some common cash-related questions that I know SaaS owners consistently ask themselves. Your statement of cash flows is one of three primary financial statements that you should be reviewing on a monthly and at minimum quarterly basis. Although we don't review this statement very often, it actually is the most important of the three statements. This video is going to explain why that is, and we'll touch on four key cash-related questions that I've notated here on the screen. Our four questions are going to be, is my business actually making money? If my profit and loss statement looks good, why doesn't my bank account also look good? How did we generate so much cash recently? And if we have a lot of cash on hand, what should we be doing with it? Cash management is especially critical for SaaS businesses as they often receive upfront payments from customers for extended contract terms. While this can create a unique cash flow challenge and opportunity, it doesn't have to be overwhelming or keep you up at night. A well-prepared statement of cash flows provides the clarity and insight needed to address common concerns with cash management and much more. I'll start by breaking down how the statement of cash flow is organized, and then we'll get into answering some of these questions. I've prepared an example statement of cash flows for a hypothetical SaaS business here. You'll notice that the statement is organized into three sections: cash flow from operations, cash flow from investing activities, and cash flow from financing activities. Organizing the statement this way is important for one reason. It helps us understand where cash is coming from and where it's actually going. We can see that the overall change for this month is $8,800. $5,000 of which is being contributed from the raising of some long-term debt. $9,000 of it is being used in our investing activities, mainly for the purchase of some property and equipment. And then we have $12,800 actually being generated by the operation itself. It's important to note that looking at the statement of cash flows for an isolated month isn't particularly useful. The real value is going to come when you start looking at this statement month over month and quarter over quarter. That's really where the valuable insights are going to come from. Let's start with our first question here. Is my business actually making money? In order to answer this question, we're going to look at our net cash from operating activities. If we see that the cash from operations is consistently negative, then technically the answer to this question is no. The business must be drawing cash from its financing sources like debt or equity, or from the sale of securities in its investing activities down here, which would then be funding any kind of gaps in the operational cash flow. However, if we see positive cash flow over time from operations, this is a very healthy indication that your business's earnings are genuine. Let's talk about our second question here. It is a common circumstance for owners to come to me with this problem where they're observing a profitable profit and loss statement, but then the cash in their bank account is not necessarily going up. There are two common reasons for this. The first reason is that your business is, let's assume for a moment that the profit and loss statement that you're looking at has been prepared correctly. If that's the case, in all likelihood, you'll probably show a healthy cash flow from operation. But then what's happening is something is going on in your investing and your financing activities that's eating into the cash that you're generating from the operation. So for example, maybe you made some acquisitions that would show up here in your investing activities, and it would be used, the cash that your business is generating is going to be used up. And then the other circumstance might be that in your financing activities, you'll see you might have maybe paid some dividends, which would eat into some of the cash generated by the business. Or alternatively, you might have been paying down some debt in that period, which would have also offset the growth that you might have expected in your bank balance. Now, the other reason that an owner might be seeing this mismatch between their profit and loss statement and their bank account is that their profit and loss statement is simply not being prepared correctly. I know that might be difficult to hear, but that is far more likely the case here. And the way that you'll know if this is the case is simply if you're unable to reconcile the change in your actual bank account numbers and the preparation of this particular statement. So for example, you would show, like when you do this every month or whoever is preparing it, you would tie out this $30,000 to your beginning bank balance statement, same thing for the ending. But then let's say, for example, when you prepared the statement here, that the change that the statement is calculating by adding these three together is actually different than the change that you're observing here. that means that we're missing something. It means that possibly the profit and loss statement is excluding, let's say it's excluding like an expense, right? Which would mean that your operating cash flows would be incorrect. Or maybe there's something going on where you purchased something that you didn't realize that you did, or something's getting buried somewhere else in this particular statement, so it's not reconciling. But that is the way you're going to be able to tell, is if you can actually put this statement together and have it reconciled to the actual change in your bank account for that particular period. Okay, question number 3 is, how did we generate so much cash recently? For a SaaS business, having a large cash balance usually occurs for one of 2 reasons. You might have just raised a series round, or you may have recently instituted a subscription pricing model that incentivizes upfront payment, and a decent number of subscribers are taking advantage of that. This leads well into our final question, which is, we have a lot of cash on hand, what should we be doing with it? Now, in an ideal world, you would have actually planned to be in this position, and the answer to this question would have been a part of that plan. You would have gone out and raised money, or you would have instituted a pricing model that incentivized upfront payment, so that way you could then deploy it to something that you planned for. However, let's just say, for example, that you're not in that position and you do have a good amount of cash on hand. You're going to want to take a couple of steps. First, you want to go through a fairly precise budgeting exercise, so that way you can tell how much of the cash that you're sitting with you can use in a discretionary way. During this budgeting exercise, make sure to ask yourself a couple questions. Maybe it's a good time for you to up some salaries because you've been paying people under market. You also want to consider what the economy might be doing, or even what your particular niche, do you expect any kind of turbulence in the future where you would want to maybe increase the level of your cash reserves right now? And then finally, you want to consider, hey, if the cash that we've generated recently, and that the reason that we're sitting with a bunch right now is because of upfront subscription payments, what are we going to do if we use this cash, but then customer acquisition starts to slow and our kind of spigot slows down? You want to consider that in your budgeting exercise, and that's where having the cash reserves really comes into play well. Once you feel good about the amount of cash that you want to use in a discretionary way, it's a simple matter of prioritization and goals. Businesses have all kinds of unique goals, so modify your priorities as needed, but let me just walk through a few. You might have some expensive debt that you want to pay down. I would certainly suggest prioritizing that with discretionary cash. You should also consider if you've paid your owner's dividends in a while. This might be something to consider. But ultimately, if we're just looking at a simple deployment of cash for growth, that's when you're going to want to get with your marketing and sales team. You're going to want to look at your cost of customer acquisition, customer lifetime value, and obviously your conversion rates to understand and calculate really how much of those dollars you want to deploy in order to hit certain growth targets that you might have. And then to wrap up this video, team, I just want to reinforce the points of value here really in reviewing this statement. And again, this is just a simple 1-month example, but when you start looking at this statement month over month, the visibility into your business honestly completely changes. And the most important metric you're going to want to be looking at on a consistent basis, is going to be your net cash flow from operations. This is one that really gives insight into the medium and long-term viability of your business, and really explains whether or not the model that you've built, the SaaS machine that you've built, is working the way that you want it to work. Other than that, team, I want to wish you all a happy new year. My name is Kyle, this is D3, and I'll see you on the next one.